Hello everyone, this is today's video analysis for June 21st, 2019. Today we're looking at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Now, it's of course been an interesting couple of weeks here for this currency pair. Last week, significant sell-off. We see the New Zealand dollar falling from the 66.65 area, the yellow zone, all the way back down to the lowest lows into the 0.6490 area, the pink shade area at the bottom of the chart. Now, this week, a little bit of a turnaround again, isn't it? Where we see the market finding support, rallying, going up. FOMC on Wednesday causing a sell-off of the dollar, and we see it challenging right back up here into 65.90, 66, the blue zone. And now today, a little bit of a pullback. So an interesting couple of weeks here for this currency pair. Pretty dramatic as we see a rise, a fall, a rise. So the question is, what do we do with this? Well, I think we go with the current sentiment expectation. Right now, the USD is still in a downtrend sell-off mode. If I go over here to the dollar index real quick, you can see the sell-off that happened over the past couple of days. And we're currently sitting underneath 96.15 on the dollar futures index and that historical support. So if it stays underneath there, the expectation is we might see a little bit of a continued pressure lower. Only if it gets back above here do we expect it to go back up. Back to the New Zealand dollar. With that, if the US dollar continues to fall, we might look for another turn back higher again here for the New Zealand dollar. So some questions still arise. Let's zoom it in a little bit. Let's go one more time. And interesting, looking back here to the left, black circle shows historical resistance into this green zone, 0.6555, 0.6540. So we know, as technical traders, that historical resistance can help us identify future support. That's the crux of all of these colored shaded areas, is that support and resistance tend to, not always, but tend to repeat themselves. And we can see that resistance, and here we are today using it on the current daily, the low, as support. So it would be my expectation. First thing that comes to mind is I don't want to sell it right now. Selling on top of this 65.55, 65.40 green shaded area it really isn't part of the scenario, because historical resistance becoming support, I don't think selling it right now makes a whole lot of sense on top of that green zone. Now, the other side of that, of course, if it gets under the green zone, that becomes the short opportunity. So if we're not selling it, there's two other things. Either we're not trading it, or we have a potential opportunity to buy into this green shaded area. Just take a quick Fibonacci, why not? Just Fibonacci from the low to our current resistance high, and we find a 0.382 Fibonacci retracement level sitting at 65.59. Hey, guess what? That's where the current market price is, and the market finding support at the 382 Fib retracement of this little rallying trend. Let's also, just for kicks, take Fibonacci from the highest high down to that same low. And in doing that, interesting enough, highest high to the low of the previous down leg, 382, sits right here at the 65.60 level, right here just above the green zone. So we're seeing an overlap of the downtrend and the rising trend of Fibonacci right here at this area into the upper 65.50, 65.60 level. So again, all of this providing us some clue that maybe it's not the best time to go short, but maybe we're looking at a buy or a long opportunity on this retracement. Now, of course, as the US dollar finds resistance, that will improve the chances this finds support into this green zone. Another challenge of the blue zone, of course, would be our profit target, and anything above there would be icing on the cake, and we look for further profit. Now, for those of you that were in the trade room earlier this week and took the long down here, the yellow shaded area at the 65.20 level, if you were in that long, I am now out of that trade. I moved my stop loss yesterday up here into about the same area that we're at. The market came down, took us out. So we're out of that long position with profit from the yellow shaded area. Now waiting to see if we can get another opportunity to dive into this. Take it down to the 4-hour real quick. There it is, making that little bit of retracement right back down into the green zone. Again, if I'm going to buy something, I actually want it to go down. Our last long, our last buy was right here, where we took the buy at the yellow shaded area. So again, it went down to the yellow zone. That's where we took the long, and then it went up. So now we're down to the green zone. This becomes our opportunity for the day today. I don't think you want to sell it on top of here. Only sell if it gets underneath there. buying on top of the green zone becomes your opportunity for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.